Bring the horns in. Hey, what's up, YouTube? Stock market coach and option trader Jason Brown here, and we're talking about two charts, two stocks, GameStop, AMC, and I'm here to give you my prediction. I think they're both going down. If you've been gambling or playing around with these stocks, I want to introduce you to technical analysis. So if you're not reading stock charts, if you're not looking at patterns and making your decisions from there, if you're only getting your information from the Reddit forum or from your friend and your coworker that's like, let's buy some of this tomorrow, then I'm here to whip that button shape and get you right with how to look at this thing. So let's go ahead and switch over to two stocks, two charts. And I want to show you exactly what I'm looking at, why I think they're going down, and how you can actually make money possibly from playing the downside. So let's get into it, my friends. Boom. All right. First chart that we got up here is our good friend GameStop. Now, at first, if you look at this, it should be very apparent what's going on with the stock. But if it's not apparent, then that means you're probably not used to reading stock charts. So let's take a closer look at it. But in order to take a closer look at it, we got to zoom out and get the bird's eye view. So we just got off our group coaching call with our Power Trades University students, and this is what we teach them to do. If you zoom out, you can clearly see one big issue with the GameStop stock. And if you don't see it, I'm going to draw it out for you. So the first issue that you can see with GameStop stock right here, you can see this level of resistance that the stock has not been able to plow through and stay through. And let me just pull up my drawing tool. You can see here, can't get through here and stay through here without selling off. Okay, nice run up. But what do you get? A doji. And if you don't know what that is, that's just a indecision day where the stock closed roughly at the same price that it opened. You got the long wick up top, long tail on the bottom, but pretty much the stock once again got up to this level of resistance and could not hold, baby. The stock started to fold, sell down. And do you think it's a coincidence? Do you think it's a coinky dink that when you look at the stock and where did it run up to most recently? You think it's a coincidence that it ran right up to that line through a doji? If you didn't know that term before, you know it now. You think it's a coincidence that it ran right up to that line, first through a long wick. Where do you see a long wick at? Again, hold on, let me show you. Long wick, interesting. Long wick, interesting. Long wick, interesting. Okay, that's number one. Number two, they're all happening at what? This certain level that's called resistance, where basically even the fools and the drunks understand that they shouldn't get in the car and drink and drive and get on this ride because it's time to get out. The party's over. The cops are coming to bust us up, send everybody home, write a few tickets, impound a couple cars if they catch you with your keys in the ignition. I'm basically saying, don't gamble. Don't throw your money away right here because, boom, we get to turn around not once, not twice, but 3 times right here at resistance, all right? And so I think the stock is going down. Where do I think it's going down to? Well, it's simple. If you know how to read stock charts, our first level, let me bring I ain't even bring the comments. We'll check the comments in a minute. But our first level of support is, where's it at? Boom, right down here. You can see there's this level where buyers kind of like the stock, or at least are willing to take a shot on this stock. And so I think the stock is going to sell off from 200 down to about 130. Now, if you do some quick math, from 200 down to 130, that's about 70 points that the stock can drop, okay? So a good 70 points that I think it's going to fall to. So if the stock can fall a good 70 points, the question is, how do you and how can you make money off the stock falling about 70 points? Well, glad you asked, because we're going to get into all of that right here, right now. So let's look at some option chains here. If we think the stock can fall about 70 points, first question we got to ask ourselves is how long do we think it will take to at least fall that low? That's what we teach our students, because most people don't know how to pick the correct timing on their stock. They just go in and pick any kind of option, which is basically gambling and guessing. So the question is, how long do you think it's going to take for it to fall? Well, past experience or past history gives us a glimpse into the future. Not all the time, but it's the best that we have to possibly predict the future until something changes. So Joseph says, hold on, let me see here. Let's play a little game. What do you guys think? How long you guys think it takes to fall back to the bottom? Joseph says 3 weeks at minimum. Okay. D Fielder says the companies are trash. Fundamentals alone, you wouldn't touch it. But here's the thing: some people do want to touch it, so I'm at least trying to help them touch it safely. I'm at least trying to help them touch it smart instead of gambling, and understand the power trades way and how we at least bring technical analysis in this, and we can at least gamble smarter, or I like to say remove the gambling and apply strategy if you're going to touch this thing with a 10-foot pole. All right. So let's see. Money Whispers says about 2 weeks. All right. So we got a couple. We got a couple. All right. So Trey says lost a lot on GME options. Well, hopefully what I share with you tonight, you'll be able to understand a little bit better. So first, we got the stock. We already know that it's at resistance. We believe it's going down from where, ladies and gentlemen? We think it's going down from 200 down to 130. That's the nearest level of support where we see buyers coming in at. Buyers came in there, buyers came in there, buyers came in there. I have no reason to believe buyers are going to prop it up any number before 130. All right. Now, how long is it going to take to fall to 130? Well, last time it took 1, 2, 3 days. Interesting. Okay. The time after that, it took from the time it hit resistance, it took 1, 2, 3, 4, 5, 6, 7, 8, 9. It took 10 days before it hit the bottom. So we got 3, now we got 10. All right. So if we take the longer of the two, you don't never want to go with the shorter term. So it hit the top. So now we got 1, 2, 3, 4, 5, 6, 7, 8, 9. Well, we're already at 10 days and it hasn't hit the bottom just yet, but that doesn't mean the bottom can't fall out like this day right here with a big gap down and a sell off. So we basically want to look at a 30-day option. Okay. So we want to give it enough time. We want to double the longest time that we have so far, which is about 10 days. So we're going to double it to 20. So let's go in here and look at the GameStop option chain. And then let's just see if it even makes sense though. So let's go out to, let's start with July. I think July 16th is the 3rd week in July. Let me just double check. Look at my phone here. Boop, boop, boop. Let's go. Boom. Yep. July. That's the 3rd Friday in July, which is the major option expiration day, which is typically the 3rd Friday of every month. Now, we believe the stock can fall from 200 to, let's go back to 130, 70 points. So we need an option that at least makes sense for us to be playing in, that can get us the profit if it does what we think it's going to do. All right. Now, what most rookies do, let's talk about the rookie mistake that most people make. Every brand new person to the industry does what rookie mistake? They buy the cheapest option that they can afford. Well, that's a rookie mistake, because the cheapest option that you can afford doesn't necessarily mean that that's the option that's going to be profitable when this whole thing shakes out. So let's look at it here and go down and boom, boom, boom. So your cheap one would be like 175, but I wouldn't go there because, again, we believe the stock, you could, but we think the stock is going to fall to 130. So let's just see. If we were to pick something like the 220 stock, that's at the money. So let's get a little bit more. I want to see all. All right, so let's come down and let's go in the money And let's go to the 260 option. So the 260 option is going for about, it's going for about, what's this, 72.65 is the last sold. So anywhere between it's probably going for about 74.75 right now, in between those two price points when you add the time and the intrinsic together. So it's going for about 75. Now, for those who don't know how options work, let me help you out, my good friends. Now, we have a whole course on this inside Power Trades University, but let's just assume you don't want to take my course. Let's just at least educate you so you won't be out here like an uneducated fool just throwing money away. All right, so if you look at the 260 and you pay 75 for it, let's just do some quick math. You pay, you get the 260 strike. Okay. Now, if it costs you 75, costs you 75 bucks, you got to subtract that from there. So 260 minus 275 is what? Quick math. 260 minus 75 puts you at what's that? 85? Boom. Did I do that right? Let's see. Boom, boom. Yep. It's about 185, right? How do you know? You can just add this back and see if you come up with 260. All right. So what does that mean? What does that mean? Real simple. Simple math, guys. It means that your break even, the stock at expiration, needs to be below, or it should be at or below 185. If it's at 185, you break even. If it's below, you actually start making money. And look, my battery's running low, but that's okay. All right. So now if we go back to the chart, though, let's go back to the chart. So if we know that 180, let's bring it back up. If we know that 185 is our break even, let's put that on the map and say, do we have a chance of actually making money? All right. So here, let's draw that out here. Boom, boom. And that's almost at 185. Let's move it up, down, boom. All right, so we know that this is our target. So if we buy that option, we need to at least get to right here just to break even. So anything below that, we start making money, right? So anything below that, but we already determined that we believe it can fall down to 130. So now, how do we calculate our potential profit? If our break even is at 185, our target price point is, here, let me switch to blue. Our target price point is 130, right? So a target, I'm going to call it PP. Target price point is 130. So if we break even at 185, we believe it can fall down to our target price point of 130. That the difference between these two is your potential profit, right? So in here is what we call potential profit, which means if this thing works out exactly how I just planned it, what's the difference between 130 and 185? Your potential profit is about 50 points or $50 per contract. So $500 per contract. Or put another way, it costs you 75 bucks. So you're putting up 75 to potentially make 50 bucks. Now, I like to go for 1 to 3 profit ratios. This isn't a 1 to 3 profit ratio. So I personally would never take this trade. However, if you like to gamble, I'm just trying to show you a smarter way to do it and how to predict where you think it's going to go, what option you should buy and why, and what your potential profit could be. Now, there is a strategy where you can even reduce the risk even further, where we can turn this into a spread, and then we can come in here and we can actually sell the option at our break even. But that's a whole nother story. If I haven't taught you how to do that, that probably just went over your head. But we could probably bring in another 1743, reduce our risk, get paid to wait, and then see if this whole thing pans out and put ourselves in a position where not only we can make 50 bucks, but we can make possibly 67 bucks, getting you closer to 100% return. All right. But let's talk about the next stock before we get too hung up on GameStop. So that's my analysis and predictions for GameStop. If you like that, give me a thumbs up, hit the like, hit the subscribe, tell your friends about this. tell them it's a smarter way to do this thing if they would learn the strategies. All right. Now let's talk about AMC now. All right. AMC, same thing. We teach the students to zoom out, guys. If you're not zooming out, then you're too caught up in what's happening today. And you're like, AMC to the moon. It ain't going to the moon. It's going back down to earth. That rocket ship has sailed and it's running out of gas. How do I know? Let's take a look at the chart. Where do you see resistance? Buyout. I mean, this is clear as day, right? Resistance. Long wick, couldn't hold. Long wick, couldn't hold. Gets back up here. What does it do? Sell off. Gets back up here. What does it do? Sell off. Gets back up here. What is it starting to do? I'll give you a minute. Sell off, right? Starting to sell off. So this is why I think if you come in here and you're like, hey, AMC to the moon, let's buy some. I think you're a fool. But not anymore, because we're helping you trade smarter. We're helping you become a power trader, because knowledge is power. So let's talk about this. I believe that we're going to get what I call a one tap, two tap. Two tap is a double hit. Bam, one, bam. I think it's coming down, right? So we already got the second hit starting to roll over. I think it's coming back down. Now, where's the first level of most reasonable support? Probably right here, which is where it gapped up to. And then you can see where it sold off to recently, about right here. It's like the bottom of this candlestick, this candlestick, this candlestick. All right. So we might have a channeling stock, maybe, I don't know. Or we could just have a complete bust and it comes back down to earth and kind of smashes through the concrete, right? But for now, this is the floor. It's a wooden floor. It's probably a card floor that's not made, it's built on quicksand. I don't know if it's going to hold, but at least we got a target price, right? So 55.69. We think it can come down to about 39.56. For the sake of math, can we just round that up to 40, my good people? Let's just round it up to 40. All right, let's round it up to 40. We think it can fall from 55.69 down to 40. All right, let's talk about how to make money if our prediction plays out. The other thing, wait, let's go back to the chart. First of all, how long do we think it's going to take to get back down there? 1, 2, 3, 4, 5, 6 days potentially. Well, we kind of had 1, 2, 3, 4, 5 days up here, but I don't call those the true 5 days. The true 5 days start when we get the sell-off. So this might be the start of the real first day. So possibly 5 days from now, we could be back down to the bottom, but let's give ourselves 30 days just in case we want to feel good about it. See what happens. All right. So we believe that GameStop can fall from 55 down to what's our target, 39 or 40 for easy math's sake. So let me give you a quick tip. If we believe it can go to 40, what option would we never buy? I'll give you this one for free. We should never buy the 40 strike price option. Why? Because it would need to fall below 40 in order for us to make money. Well, if it's going to fall to 40 and we think it possibly could bounce and turn around, then you put yourself at risk of never making money and not even breaking even for that matter. So I gave you that one for free. That's why you guys need the education. Take the courses. You need to learn this stuff. All right. So we would never buy the 40. Why? Because 40 is where we think it could fall to before it turns back around. If you buy the 40 for $5, your break even becomes 35. Well, we don't know if it can fall to 35. We know that it can come back down here to about 40. All right. So let's go back to the option chain, see how we feel about it, and see if we can find something that makes mathematical sense for us to actually consider buying. It couldn't be no option makes sense, because all this stuff is way overpriced based off hype. But let's just see if we can play into the hype and get someone else to take this foolish bet and we can come out on top. So if we go all the way up to the 70, whoo! All right, first of all, we got to do a little bit of calculations here. If we think AMC can fall from 56 to 40, let's bring in our handy dandy drawing tool. Let's get a new sheet of paper. If we think AMC can fall from 56, that's a 6, down to 40, we believe that it can fall how many points? Oh, my handwriting is horrible. It can fall about 16 points, okay? So I won't want an option that needs to move more than 16 points for me to break even, because that would be stupid. We only think it can fall 16 points. So let's take a look at this thing. The 70 strike price, I'm gonna pay about, according to this, 25 bucks to it. So if I buy the 70 for 25 bucks, my break even is what? 70 minus 25, quick math. That puts me at about 45, but I think the stock can fall to where? 40. So that's $5 below my break even. That's not the greatest either. So let's go back, see if we can find an option that can pay a little bit better. That's not a bad option. That's smarter than having no game plan, but you're risking 25 bucks to potentially make $5. That's not that sexy to me, but people do it all the time. I like to risk $1 to make 3. Or in this case, if I was going to risk $25, I should be able to make 75. That's not the case. We're risking 25 to possibly make 5. Not that sexy, which is why I would probably never get caught dead in this trade. However, we're here to help the gamblers out. So let's see if there's anything better to gamble on. All right, let's take a look at the 100 strike price. You're going to pay about 50 bucks for it. So 100 minus 50, which means your break even would be 50, right? So if your break even is 50, boom, 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 and we believe the stock can fall down to 40, you're risking 100, not 100 bucks. Wait. You bought the 100 strike price for 50. Okay, so that's not bad. You're risking $50 to make potentially $10, because 50 is your break even. Everything below that you make money, and we think it could fall to 40. You risk 50 to make 40, 20% return. Technically not bad. Technically not a bad trade. That's about the one that I would entertain. I would probably do none of these. But if I just couldn't stand it and got tired of people talking about it at work and all that stuff, that is the one that I would trade. All right. So anyway, I hope that's been helpful for you guys. Let's see. What kind of comments do you have? Bro, you're telling us to sell Wild Just Wild. I don't know if that's a good Wild Just Wild, Ronnie Rocks. But yeah, I'm breaking down why I believe the stock is at resistance, where I think it's going. And anybody that's buying bullishly, I think, is a fool and going to, I think they're going to get screwed, right? So I'm going to come back around like we came back around when it was $5. I don't even know what some of these comments mean. Then some idiot used profanity, but the good folks at YouTube blocked your comment. So you can go somewhere and kiss it. But here's the thing, guys. It's all about being smart, right? Nobody cares about you at the end of the day. So if you think you are screwing the hedge funds or the little guy, you need to quit smoking the pipe, all right? The hedge funds are going to be just fine. They're going to get more venture capital. And really who's going to get stuck with the bag is the little guy who has a Robinhood account, who thinks he can strike it big in the stock market if he just gets in GameStop or AMC at the right time. Yet that same guy never read a stock chart in his life, knows nothing about options, and doesn't realize he's actually buying that resistance and gonna get majorly screwed when the stock sells off. And before his life gets started, where he could have made a ton of money from the stock market, he's going to say, I tried something like that before and it doesn't work, right? And it's not that it doesn't work, it's that you didn't get any training. You didn't learn how to read stock charts. You didn't learn how to strategize with options. You basically just bought off a hunch from your broke friend at work who said GameStop to the moon. Same guy that told you Dogecoin to the moon. And yeah, you lost your entire stimulus check, your refund check, and more importantly, you lost your hope that the market could get you out of debt, could pay for your house, could put you in your dream car, because you squashed it because you came to the market gambling, son. So don't gamble. That's basically the message. Or I'm going to get my whip out and I'm going to have to spank you. All right. So don't gamble. Learn how this stuff works. and learn how to read the stock chart. So hopefully this has been helpful for you. Let me bring my information back up. Jason Brown, stock market coach, option trader, all that good stuff. We're breaking down why you should probably sell GameStop and AMC, or at the minimum, at least buy some put options to protect the foolish bullish play that you think is going to the moon when it's really coming back down to earth. So there it is. Have a good day. Thanks for hanging out with me. Hit the like, hit the subscribe button, smash it. And if you got any other comments, guess what? That's what the comment section is before. I'll see you guys in the comment section.